Gold and silver in your possession is virtually invisible. It's virtually invisible. Nothing else is invisible. If you have everything in fiat money, you will not be able to take advantage of the opportunities that will arise when this debt bubble becomes, it's already popped, when it becomes apparent. But there are opportunities ahead for those that are holding physical gold and silver outside of the system. Be one of them. Don't let those that are in power have all of the opportunities.
Gold has surged to record highs this year, with the potential to challenge the $3,000 per ounce mark. This rally has been fueled by heightened safe haven demand, particularly as former U.S. President Donald Trump introduced aggressive trade measures, including proposed tariffs on steel and aluminum imports. Meanwhile, silver has been testing key resistance at $32.65, consolidating near its recent highs over the past several days. Lynette Zang has repeatedly highlighted market manipulation in the precious metals, questioning why gold isn't still priced at $400 or silver at $5 if these markets were entirely controlled. She views the rising prices as evidence of a broadening market and remains optimistic. According to Zang, gold's actual value exceeds $40,000 per ounce, while silver should be worth over $2,000 per ounce, making both metals significantly undervalued at current levels. According to the World Gold Council, central banks worldwide have been aggressively accumulating gold, purchasing more than 1,000 metric tons annually since 2022. These acquisitions serve as a hedge against currency volatility and inflation, and a means of diversifying reserves to reduce dependence on the US dollar. For nations like Russia and China, gold accumulation is also a strategic move to mitigate the effects of US sanctions. Zang emphasizes that the global debt bubble has already burst, though the full consequences have yet to unfold. When they do, new financial opportunities will emerge. She believes those who hold physical gold and silver outside the traditional financial system will be best positioned to navigate the coming economic shifts. For her, owning these metals is not about speculation. It is a vital strategy for preserving purchasing power in an increasingly unstable financial landscape. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
Global central banks have shifted their policy and actually been accumulating gold since 2005, which I think is rather interesting because nobody noticed it until 2010. But of course, it was the crisis that made it apparent to everybody. So I think for the public, we've got more younger people that are coming into the gold and silver market, which is so inspiring to me because it's not us old people that are going to create this revolution. It's the younger generation that will do that. So I think that's also a catalyst for silver. And you know, silver, most undervalued metal. Look, these markets are not a place where you can get any level of good price discovery. Everything has been turned into a trade. If you think when you pay your utility bill that that's actually supply and demand, think again. When you go to the grocery store and you buy your food prices, everything is being guided by traders. That's how the banks make most of their money these days, not from lending, but from trading. So I think that it'll be the inflation, because I think this year we're going to see a lot more and a lot faster inflation, and the public starts to notice it. So I think it's public buying that's going to push it, because central banks have been buying and accumulating it for a long time. But the other thing that I'd like to point out is if it's so many people are manipulating these markets, why don't we still have $400 gold and $5 silver? So I think that is an indication of an expanding market. And that actually gives me a whole lot of hope. And I think both metals, I mean, you know, you look at the fundamental value, because one thing I learned from my Uncle Al, and when you're dealing with hard assets, is it always goes from undervaluation to fair valuation to overvaluation, like this continuous figure 8, right? An infinity sign. And so where are we now? We're probably right about here, still in undervaluation. And I say that if they were going to do an overnight revaluation, because that is when we will see it move toward its fundamental value. Because what gold and silver are the flip side of the fiat money, the debt-based money. So it's easy enough to go ahead and say, okay, how much debt is there in this world? And how much gold is there in this world, even with the new gold find in China, right? Anytime you get physical, there is a finite amount, period, right? So it doesn't really matter, but you look at this, and I know that gold is really worth somewhere north of $40,000 an ounce, and silver's worth somewhere north of $2,000 an ounce. So at 26, 2,700, 3,000, or at $30, it's ridiculous. Having said that, though, I think what we're headed into, and I think it's already begun, is the hyperinflationary depression. And I've looked at enough hyperinflationary circumstances, and you see that gold-silver ratio gap grow more and more narrow, but then toward the end of it, gold expands because gold is the primary currency metal. Silver is used in manufacturing as well. But gold is recoverable, silver is a diminishing asset, gets used up. So there is really no good justifications for the prices, but I think it's public participation that will push that. And I could easily see silver, I mean, it could have happened this year too. But what you can't control is how much gold and silver is created by these contracts that do not and never will exist.
Donald Trump once stated that if the US dollar were to lose its status as the world's global reserve currency, it would be equivalent to the nation losing a war. This perspective put the BRICS alliance under his scrutiny, as the bloc had long been rumored to be developing its currency. Although never officially announced, speculation surrounding a BRICS currency persisted throughout 2024. In response, the current U.S. president threatened significant tariffs on nations that failed to support the dominance of the U.S. dollar. However, BRICS has now officially abandoned its currency plan. But will a Trump-imposed tariff also be removed from the table? According to Lynette Zang, the BRICS currency initiative aimed to facilitate cross-border trade with instant transaction settlements. She notes that BRICS nations are eager to tokenize financial systems, but she remains skeptical about whether their model truly represents a fundamental shift from existing structures. Zhang also cautions that while governments may claim their currencies are backed by gold, without clear proof and convertibility, such claims hold little weight. Let's now turn our attention to the video again.
The BRICS currency is really about cross-border trading, everything being traded and atomically traded, right? Which means that as soon as a transaction happens, everything settles. So I know they want to tokenize everything. I'm sorry, but I don't really see the BRICS system to be a whole lot different because I don't see the governments over there taking better care of their citizens and the citizens having a whole lot of freedom than there are anywhere. But they want us to think it's them against us so that you have a common enemy and it's divide and conquer. And I want to do just the opposite. I want, you find everybody here wants the same thing. They want to have a safe place to live, raise their family, have opportunities, have real opportunities. I read about the unit. It's supposed to be 40% back, but again, not convertible. It is so key that people understand the difference because what is pegging? Pegging is just using the manipulated price of the spot markets anywhere. So I don't really view it, frankly, as them or us. I think that whatever country truly comes out with a gold-backed currency, that you and I, as a citizen, if we don't like what we're seeing them do on Capitol Hill or anywhere in government, you walk in with one currency, you pull the gold out of the system. That's what creates those restrictions. That's what I think we need to really be fighting for, not just having a government say, well, this currency is backed by gold. Because how do you prove it? How do you really prove it? Do you know how much gold is in Fort Knox? It doesn't mean anything.
It hasn't been audited since the Eisenhower administration, yeah.
So, and it hasn't changed even 1/16 of an ounce. So how do you know? So yeah, I don't view that as a huge threat. Definitely power is shifting. But I say, let's take our power back. Let's have it shift in the right direction. Not from one bad government to another bad government, but from the government to the people.
Traders are closely analyzing the potential effects of the White House's trade and immigration policies on the U.S. economy and monetary policy, particularly if these measures contribute to rising inflation and slower growth. Federal Reserve Chair Jerome Powell, during his testimony, refrained from speculating on tariff policy, emphasizing the uncertainty surrounding its economic impact. Meanwhile, gold has continued its upward trajectory, with increased inflows into bullion-backed exchange-traded funds. Global holdings have climbed in 6 of the past 7 weeks, reaching their highest level since November, according to Bloomberg calculations. Are we seeing a shift in investor sentiment toward gold as a safe haven asset, or is this just a temporary surge? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.